This video is going to be all about auto insurance. So just some overview information. So California is an at-fault state, meaning that the laws in the state are set up so that if you cause an accident, you will be on the hook for any damages. So because of that, it is required that all drivers must carry auto liability coverage. So we'll talk about exactly what liability coverage is. And so just a little more overview. So where can you get insurance from? Here are some of the most common insurance carriers. AAA, which also, they can provide you with other types of insurance that we're going to discuss in this module, such as homeowners insurance, Geico, Allstate, Progressive, Direct, and the General. So these are, kind of the bigger players in auto insurance. And so what are the factors that determine auto insurance cost? First is your driving record, most obviously. So how many tickets you get, how many accidents you've been in, and other traffic violations, such as a DUI. So if you have more of these, obviously, the insurance company is going to kind of get the sense that you're more risky to insure, and your insurance costs and the premium you pay is going to be higher as a result. Also, your age and your sex. So younger drivers tend to have higher insurance costs because they, again, are perceived as riskier drivers in general. And women actually tend to get into fewer accidents and therefore end up paying lower premiums. Your location. So there are higher rates of vandalism, theft, and accidents in certain areas. And so urban drivers, for example, tend to pay more than rural or small town drivers. So the location of where you live and where you're going to be driving matters for your insurance cost. Also, the car you drive. So the cost of your car is a major factor in the cost insured because basically the insurance is going to cover any damage potentially that happens to your car. And also certain cars, such as sports cars, may be correlated to just more risky driving behavior. So the car that you drive will be a factor in the cost. And finally, the type of coverage that you get. So as I mentioned here, auto liability coverage is required, but there's also different types of coverage that you can get. So we're going to cover those in a little bit in this video. But just to kind of give you a sense, the type of coverage that you choose to get, besides just this minimum coverage for liability, that's gonna kind of increase the cost as you choose more things to cover. And then your credit score. So some auto insurers may use credit-based insurance scores as an input to determine the cost of your insurance. So California actually does not allow this, but in other states, your credit score could matter in your insurance cost. And this is kind of just another way that your credit score plays into many aspects of your financial life. Okay, so now let's talk a little bit more about the types of coverage that are offered in auto insurance. So auto liability insurance is required by all drivers and is usually quoted in this format, X, Y, Z. So for example, 100, 300, 100. You'll see this as kind of a way that auto liability insurance is quoted. And so what are these X, Y, and Z? So X is, in this case, this 100 here, is injury or death coverage per person. Y, which is the 300 in this case, is injury or death coverage total in the case. So in a particular accident. And then Z is, which is this 100 here, is property damage. And so 100, 300, or 100 would provide 100K per person, 300K total. So let's say there are two people, you caused an accident, two people were injured, and the court or whoever is kind of determining the damages determine that each driver is entitled to 100K in, kind of damages for whatever injuries they sustained. This insurance would be okay because it's 100 per person. So even though there are two people, each getting 100, that's only 200K total. So the limit meaning the maximum amount your insurance covers 300 per accident. And so you would be under this total, even though per person you're kind of maxed out. And then 100K is for property damage, including the other person's car. So, if 100K was for the injuries and their car was worth 40,000, this particular coverage, 100, 300, 100 would be fine because again, the 50K car would be under this 100K limit for property damage. And so, there's different levels of this. So, for example, you could have 20, 100, 20. Okay, so that would be 20,000 per person, 100,000 total, and 20,000 for damage. So obviously, this policy would be less than this policy in terms of cost to you because you have much less coverage because the limits are lower. And so, depending on kind of the limits you're looking for and kind of the amount of coverage you want, the cost of the insurance is going to differ based on, obviously the higher the limits, the more the insurance is going to be because the insurance company is taking more risk. Okay, so again, this auto liability coverage is required because these limits here are covering other drivers in case you are at fault in the accident. And so, what are some additional coverage options? Because again, this liability is not going to cover you or your injuries or your car being damaged. So, how can you do that? So, you can get what's known as collision coverage. So, this will cover your car if you're in an accident and it is your fault. So, collision is just an added layer of insurance that will protect you and your car. Comprehensive is coverage for non-collision damages to your car. So this includes things like theft, vandalism, damage while it's parked. And so basically it's just more comprehensive coverage for your car in general, not just while you're driving and involved in a moving accident. Another type of insurance is called uninsured or underinsured motorist coverage, or UM. And so if someone else is at fault, they can have, let's say they only have this 20, 120 insurance, and you have an expensive car that's worth, let's say, $50,000, then they will be underinsured. Their insurance is not going to cover your expensive car. So getting the UM insurance will protect you if the person that you're in an accident with and it's their fault if they have kind of lower end insurance. So, if you have a more expensive car, or if you just want to protect yourself against someone who's driving without insurance, this is a good coverage option to have. And then there's roadside assistance. So, it will provide you with towing, battery change, or other emergency services if your car breaks down. And so, especially for people with older cars, this could be something that is very beneficial to have. And even, battery changes, even newer cars, the battery, can go out at any time and it could be in a place where it's unexpected. So, this is probably a coverage that's worth considering. Okay, so what are just some additional considerations? So, leased cars will usually require collision and comprehensive coverage. And so in another video, I talk more about leasing cars. But just for the purposes of this video on insurance, just know that if you have a leased car, that it is probably going to require collision and comprehensive. So your insurance is just going to end up being much more than if you just had liability. You may take the risk with an older car to not have collision coverage, especially if you're a safe driver. So, you can determine and kind of be real with yourself about how risky of a driver you are. And if you have an older car that you're kind of okay with not having replaced, if you get into an accident and the small chance that you do, then you can potentially take the risk and not have collision. UM coverage might be worthwhile to have since it's estimated that 10 to 15% of drivers are or underinsured. So, and I would be willing to bet that this 10 to 15% are probably more risk takers in general. And so maybe they are overrepresented in the people that are actually in accidents. So the people that tend to either drive without insurance and take that risk, or just get less insurance, or might are maybe risk takers in general and end up being in more accidents. So that just increases your likelihood of being in an accident greater than 10 or 15%. So it could be worthwhile to consider insurance. And so what do I recommend? Let's just kind of summarize what I would recommend to you if you're kind of shopping around for insurance. So I would go with the 100, 300, 100 for liability at a minimum. Um, the state minimum in California is actually 1535, so it's really low. So they don't require much, even though they require you to have it. But just for your protection, I would say that you should go with the 100, 300, 100 because it provides kind of an adequate level of protection for most situations. I would not get collision or comprehensive for older cars. I myself don't have either of those coverages, but I drive a 2008 kind of low end Toyota sedan, so I'm okay with not paying the extra premium for those additional coverages just because of the car I drive, and I know I'm a pretty safe driver. I've never been in an accident, so you kind of need to do some analysis of your situation when making the decision on collision and comprehensive. I would get roadside assistance. I think it's really helpful because your car can break down, and it's nice to have I believe they give you like 50 or 100 miles of free towing that are included with it. So just to get your car back to your home or to a mechanic shop, it's nice to have that coverage because if you don't, I believe it's pretty expensive to tow your car. So with just one tow trip in 5-7 years, it may more than pay for itself. And then I would get the the uninsured motorist coverage, because we just talked about this statistic here, so it's probably worthwhile to get that. And just for context, the average cost of auto insurance is around 172 per month. I'm not sure if that includes these other, comprehensive and collision, but this is just the statistic to give you a sense of what the average person in California is paying per month for insurance.